Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on April 26th, 2020. In this edition of your weekend video newsletter, we'll discuss the mix in signals that we're seeing currently. We'll also look at the tech leaders. Most of them had moved higher with the exception of Nvidia and Google. Microsoft was off 2.27% on the week, but it did finish higher on Friday. And we're watching Microsoft this week with earnings. Intel was out last week. That finished higher on Friday, filling the gap. And we'll look at Tesla, which continues to consolidate at recent highs. The bond stock ratio is mostly bearish for the most part short term. Dow Composite is in a bullish wave. Again, we have mixed signals. S&P 1500 gave us a bullish cross, but it is flat at the lows currently, and the XII is bullish. Tick and Tick-Q started to turn more bullish Thursday and Friday. NYMO and NAMO are seeing a bullish cycle peak. NYHL is flat just below the zero line, and the S&P Equal Weight Index is showing improvement in the number of stocks moving above their 50-period moving average, finishing off around 41%. Put-call ratio is neutral. The key again this week is VIX. As long as it continues to drop, that'll force dealers and market makers into more of a neutral position, looking for gamma to flip to bullish and for price action to continue higher. We do have the 50 and 200-day overhead as resistance. Bonds, we're watching AGG. That's been in a 2-week range at the highs. Same thing with IEF and SHY, the shorter duration bonds, while the 20-year bond continues trending and the 10-year yield remains at extreme lows. Gold is fading from recent highs, pulling back to its breakout zone. We had copper rising and bullish. That's making higher highs and higher lows. That's bullish for the economy. And West Texas crude is off more than 90% from the 2018 highs, dropping dramatically last week to extreme lows. Heat map is fading. It's still green, but we're seeing more lime green. Same thing with international markets as they begin to fade off of the current bullish cycle. So we want to see that improve and stay green. We'll also look at some IBD 50 names that are showing relative strength that, believe it or not, look very bullish going into the week. We'll also look at some relative strength names on MarketSmith, the blue dot scan candidates in cyan, and the green candidates from the top volume percent gainers last week. Bukowski is showing 505 green with a CPI signal green since March the 23rd. It's at 69.9%. It was in the 90% last week, so that's fading a bit as well. He's showing 25 bearish patterns, 58 bullish patterns, and 435 patterns waiting for breakout this week. Bottom line, we're still in day trade mode. Short-term swings, we're cautious. We're watching what institutions doing. We're keeping an eye on VIX that keeps dropping. That'll help out, while signals are mixed going into Monday trading. Here are the spiders. We felt that we might see sideways price action hold between 0% and 236 Fibonacci levels from the March 23rd low of the 2 weeks ago Friday highs at 287.30, while we watch RSI continue to move higher. Now that we closed above the 50-day, we have the 200-day overhead and 618 Fibonacci from the February highs down to the March 23 lows. So this is the next level somewhere in the middle here. And if VIX continues to drop, that would help the gamma situation flip to more positive. Currently, zero gamma is at 286. So we're watching how that plays out. With MACD above its signal line still rising, it's flattening out a little bit. Momentum had slowed, keeping in the back of our mind that VIX is the key to this rally if it continues to move lower. In addition, price action bounced at the 21-day on Tuesday, followed through above the 9 EMA on Wednesday, Thursday, and finishing higher on Friday, while remaining in this sideways price action consolidation zone or range between 271 and 287 over the last 2 weeks. NASDAQ, on the other hand, this is the weekly chart. RSI remains above 50. That's bullish. We did dip earlier in the week again on Tuesday, but finished the week higher. So we did see buyers stepping up on the big cap tech names. There were several that were lower last week, like Microsoft, that also fell on Tuesday, but managed to hold above the 9 EMA Wednesday, Thursday, and Friday. So this looks pretty good going into earnings on Thursday. We're looking for a move to 180 and potentially up to 185.95, maybe midweek if this continues higher into earnings. Remember, premiums will continue to inflate. So if you have options, we're probably going to hang on to ours into the day before earnings. As premium expands, your option prices will also as well. Other big cap stocks like Apple dipped on Tuesday, did the same thing as Microsoft, finished higher on the week. We're looking for these levels overhead at 288.25 on Apple. If we can get through that 291 ATR band right there, we could see 301 and 304 in the short term. Momentum is turning back up. Bulls continue to show up. We're seeing higher volume on Friday and RSIs above 50 and rising. Stocks like Facebook, Zuckerberg on Friday announced 50 users or less can use the conferencing services similar to what Zoom offers for free. They were also talking about other free services that help lift Facebook end of the week. On Friday, this rallied while Zoom fell back from the recent highs. Note that this is the markdown period over here as price action fell during February and March into April and continued to move higher, which leads me to Amazon, which if you think about it, Zuckerberg seems to be modeling a lot of his social media services around the same idea as what Bezos built his retail model around. Tesla also listed on the NASDAQ 100. This is looking pretty bullish actually, holding the 9 EMA for the past 4 days, a gap down on Tuesday, RSI is still above 50. Looking for an expansion day and a breakout above this range. This is building the right side of a cup pattern. Most likely will stop around 1,000. I would imagine Tesla will continue to move higher just based on price, not my opinion, as Elon continues to find ways to gain market share while adding revenue sources. While we can debate our views on Tesla, price action is telling me that bulls continue to support price action as it builds the right side of this cup pattern. That leads us to small caps, which have been consolidating under this 2018 pivot low for the last 3 weeks. A lot of small cap oil and gas names were moving higher last week, as well as big caps, but these small caps dominate the Russell 2000. If those continue to improve in the energy space, look for follow through. An additional bullish indicator, of course, is VIX. This particular indicator is the VIX flipped on its head so that it aligns with price action. As long as this stays green, we look for higher highs and higher lows. Looking for this to follow through. This is a mixed signal, but if VIX continues to move lower, that could create a catalyst for breadth to improve again. Moving back into a zone of normalcy, if we can see that, we'll flip to gamma positive in the short term, and that would lead to institutions, dealers, and market makers supporting pullbacks, buy the dip if you will. So that's something we're looking forward to into the summer and fall months. As economies begin to open in select states, this will continue to move lower as fear and safety trades continue to unwind, further exacerbating this move lower in VIX, which will again lead to more buying in select assets. Some breadth indicators, S&P 500 in the middle panel, mid caps, small caps, and NASDAQ 100 in the lower panel continue to move off of the zero line. We talked about this midweek. We're looking for a bounce back up towards the 30% level. We have a ways to go. That's telling you you have more fuel for higher in the short term, maybe peaking by Wednesday or Thursday this week. That would align with potentially testing the 200 period moving average overhead. So look for breadth to improve. That's the one thing that is waning at the present time. When we look at the McClellan oscillator for the NASDAQ, we can see that this is starting to peak. Doesn't mean it can't turn back up, but by midweek, if this doesn't break out and things start to improve, the summation index does show that the momentum may carry us forward. I'm a little bit concerned about this black line as it starts to peak though. Same thing that we see on the NYMO for the New York Stock Exchange, peaking as well, while NYSE continues to rise. Taking the sum of all factors, this is more important. We need to see a breakout of this consolidation, more of a diamond-shaped pattern, looking for a break to the upside, and for breadth to continue improving. With the one caveat, NYMO and NAMO starting to round out the current cycle. In addition, we see the put-call ratio is neutral. It finished off the week between these two horizontal lines. Anywhere between 0.90 and 1.10 is considered neutral, more or less. We would like to see this dip and for more calls to be bought this week into OPEX Friday and OPEX May monthly options expiration. That would help lift gamma while we're right now in a neutral condition, which we can see here is 2887 for S&P 500, and for spiders it's 286, where we flip from negative gamma to positive gamma. The significance here, if you're a new member, is that when gamma is positive, you have a trending condition where institutions, market makers, and dealers are buying the dips and selling the rips. When gamma flipped to negative on February 24th, that's when everything came unwound. As institutions were now overhedged, they were selling futures, which exacerbated the move lower until we hit that pivot low on March 23rd, where everything started to change into monthly options expirations. With the bottom line being you want to see VIX continue to drop, which will force institutions and dealers to become more market gamma positive. So we need to see more calls being bought. That will happen as this ratio drops to 0.70, 0.75, and 0.80. As we can see over here, as price action rose, VIX was in a normal range, and the buy the dip was supported by market makers, dealers, and institutions. One of those contrary indicators at the moment is the bond stock ratio in the lower panel, the red line. If this continues to move higher, that would be short-term bearish for equities as bonds are being favored over equities. In addition to yields, if these continue to move lower, high yield corporate and junk bonds, that would be a short-term bearish headwind for equities, while the more popular 20-year Treasury bond trends along the moving averages, putting in higher highs and higher lows, with the 20-year showing signs it'll follow through this week, while the Barclays Aggregate Bond Fund, AGG, continues to flatten out. For the past 2 weeks, we have a position in AGG in our retirement portfolio. With my current weighting, 48% in equities, fixed income, and cash, again, AGG, among other fixed asset instruments, at 43%, and alternative assets like hedges at 8.26%. Meanwhile, we see the currency pairs all consolidating from those wild swings that we saw back in March, this being the British pound US dollar, consolidating for the past few weeks at the 21-day moving average, while the US dollar Japanese yen pair continues to flatten. If this starts to move higher, that would actually be bullish for equities, while simultaneously being more bearish for gold, as this is priced in US dollars. If the dollar continues to move higher, that would put pressure on gold, along with copper, which remains in a bullish trend. That's good for the economy as it rises, while West Texas crude continues its plummet last week, off more than 90% from the recent highs back here in 2018, as this most often has a positive correlation to equities. Presently, it's broken that correlation in the short term. Conversations between the Saudis and Russia ongoing as something that will affect the markets. We're also watching sectors as they gravitate from chartreuse green to lime greens and yellows. This could be marking a change in the short term. So we want to see this improving and turning more green. While sectors look good, we're looking for more improvement, higher lows in all cases. We're back above the 20-day. We tested it last week. Materials are starting to push above the 50-day. We did see communications move above that level thanks to Facebook. Technology remains above the 50-day, showing the most relative strength next to healthcare, which you would imagine in this current crisis, a lot of names in that group are improving. Another thing you'll notice is stocks like Adobe, very bullish looks to them. RSI is above 50, MACD's above its signal line and rising. We just need to see more volume as price action continues to rise. The 9 EMA is above the 21-day, is above the 200-day. Very bullish condition. We're looking for a follow-through, a takeout of the 350 level, and then 358 and 364 as targets going into the weeks ahead, barring any unforeseen catalysts that might impede Adobe's follow-through. AMD also looking good. Fell a little bit to start the day on Friday on Intel earnings, but did finish higher, looking for a breakout. Alexion Pharmaceuticals, RSI is moving higher, breaking above the 200 period moving average. Look for a follow-through, a test of 114.50 in the short term. Applied Materials, another technology stock, looking for it to push through the 200 period moving average. It's been consolidating underneath with 9 and 21-day, suggesting we could see higher prices. Look for RSI to follow through as a function of price, and for Applied Materials to move back above the 200-day in the short term. Atlassian, symbol TEAM, this looks like it's trying to break out of this consolidation zone. 52-week highs with RSI rising, MACD above its signal line. Just need more volume to push prices higher and confirm that institutions are interested. Autodesk, very bullish looking pattern, close enough to the 9 EMA that we could see follow through and be a decent buy using the trade of the day setup for entries, exits, and stops, along with VWAP. Bristol Myers, Merck, Pfizer, Eli Lilly, AstraZeneca, all of the pharmaceutical names have been strengthening. Looking for a follow through this week as well. Copart refurbishes, restores damaged cars and resells them for insurance companies to help offset damages. Looking for a follow-through. RSI is rising above 50. Price action close enough to the 21-day that we could see a nice run from this level at 73.83 up to 83, the 200 period moving average. So you got about a 9-point possibility here. Look for a follow-through first thing in the morning. Use VWAP for entries, exits, and stops. Make sure VWAP is sloping higher to start the day if you're interested. Also look for volume to continue, showing institutions are picking up shares closer to 52-week lows, looking for 52-week highs in the weeks to come. Dexcom, we've been watching this one over the last couple of weeks. Mentioned this a couple of times. Some of you took this over the last few weeks, breaking above this level, taking out 52-week highs in the process. Dropbox, a nice candidate, fairly inexpensive at $20 per share, looking for a takeout of 2069, then the 2162 third ATR bands at the top, and then maybe a test of 2373 in the next couple of weeks. Eli Lilly, that pharmaceutical that was doing very well over the last few weeks, off of the 200 period moving average, a nice move from 120 up to the current levels, 40 points. Nice gain there. I know Mikey's been in this one as well. Facebook, we already talked about. Look for a follow-through to move above the 200 period moving average. GoDaddy, hosting services, we're looking for a follow-through here as well. Over the last couple of weeks, this has performed as expected. As RSI continues to rise above 50, price action moved above the 9 and 21-day. They crossed over. Now price action is consolidating above the 200-day. Look for a test of recent highs over the next couple of weeks. Semiconductors could continue this week as well. KLA 10 core breaking above this pivot high bag holder level, close enough to the 9 EMA. This should follow through and test some of these higher levels overhead at 179.20 in the short term. A nice $15 move from Friday's close. Watch gold. If that continues to move higher and does start to make some higher highs this week, look for Kirkland Lake Gold, which just cleared the 200-day moving average, to follow through. RSI is rising, nearly overbought, so maybe a little bit more consolidation. RSI pulls back a little bit. This does look good for a scalp, though. Day trade on Monday if this continues. Lumentum, looking for a follow through. It does have earnings on deck. MSCI, looking for a follow through and a takeout of the all-time highs, 52-week highs. RSI is above 50. MACD is above its signal line. Volume is starting to increase on Friday as it pushes off of the 9 EMA. Close enough to the 9 EMA that we could see a lift, a stop below this breakout zone on Monday if it does continue higher. Microsoft out with earnings this week on Thursday after hours, looking for a test of this level at 180, then 190. As RSI continues to suggest higher prices, volume and MACD looking pretty good. Nvidia, most of the chip stocks moving higher. This is close enough to the 9 EMA that we should see a follow through and a nice scalp on Monday, Tuesday. With RSI above 50 and rising, we just need to see more volume and MACD remain above its signal line. Another of those pharmaceutical stocks that continue higher, a larger discount to some of those big cap stocks like Lilly, though most of these are continuing higher, as we pointed out over the last couple of weeks as it rose above the 9 and 21 day. Potential for follow through. We did see that confirmed last week. RSI is above 50 and rising, a common theme. MACD above its signal line. And bullish, we're looking for more volume on PCRX. Power integration's been consolidating along the 200 period for a while, looking for a push higher. RSI is above 50. MACD is above its signal line, turned higher, with volume tapering off towards the end of the week. Qualsys, been on the watch list, been talking about this one for the last several weeks as it cleared the 200 period moving average at that 85 level, continues to move higher, 20 plus points now, as it exhibits relative strength. Volume shows that institutions have been picking up shares. QDEL, same thing here. This has been on the watch list. We've been talking about this choppy action that led to a potential for a breakout as it stayed above the 9 and 21 day. 9 and 21 day, look at the slope of the EMAs. The steeper the slope, the faster a stock usually moves. Watch VWAP for entries, exits, and stops if you're thinking about scalping this one. ResMed, coiling, looking for a move in either direction. 9's above the 21 day, so I'm thinking that the move is going to be higher. Scott's Miracle Grow, we looked at this one last week. This followed through. Service now coiled up in a 2-week range. Look for this to break out above this pivot level and for a run to this high overhead at 350. RSI is above 50 and rising, and MACD is above its signal line. SIMO trending right along the 9 EMA. Notice the buyer stepped up right at the 9 EMA on Friday. Look for this to pop above 45.07. That could give you 47.49 in the short term. Solar Edge looking for a follow through. RSI is above 50 and rising. Price above the 9/21 day and the 200 day. Another semiconductor that looks like it could push off of this level. Note the buyer stepped up on Friday at the low, right at the 9 EMA. Looking for a push above 53, 54, and then could see 56 in the short term. 56.47 is the third ATR band. RSI is above 50. Look for that to turn up. I'd like to see more volume and MACD stay above its signal line and stay in a bullish trend as we saw last week. Teradyne's another stock. Right at the 200 day, look for this consolidation to lead to higher prices. RSI stays above 50. Trade Desk doing what some of these other stocks have been doing, either consolidating below or above the 200 day and then taking off to the upside. Look for a test of 52-week highs in the short term. TTD looks pretty good. RSI is rising, suggesting we could see more follow through. While volume increased, we'd like to see this on a lot of our stocks going into this week. Above average volume and MACD stays above its signal line and rising. That indicates institutions are here and interested. Toro looking for a move above the 9 and 21 day and a test of these levels at 67, 68 and then ultimately a rise up to the 200-day. Look at RSI, suggesting if it gets above 50 that we could see this follow through in the weeks to come as a potential trade. Trade web, 9 EMA, rising, nice slope to the EMAs. Buyers stepping up at the lows of the day, noted in these wicks. Tuesday, Wednesday, and again on Friday. A little selling up there at 53, so look for a move through 53, 53, and then 55, and a breakout over the next couple of weeks. And Vertex Pharmaceuticals, while I'm not interested in trading Vertex, it is showing that strength that we've seen in all of the pharmaceutical names that we've been trading: Johnson & Johnson, Eli Lilly, Bristol Myers, PCRX, among others. So watch for all of these to move together. There's a lot of relative strength names too. If you're a MarketSmith subscriber, make sure you check out the relative strength line, as these potential candidates look pretty good. BioMarin, another pharmaceutical name. Just check out these names. I have them listed, the stocks that I've already reviewed, down below in the opening monologue. While stocks in the blue dot scan also look very good, those are listed as potential candidates. Looking for follow through. Here's a nice cup and handle pattern on Synopsys. Sapiens, SPNS, nice little cup pattern building, relative strength line climbing. Sam Adams, Boston Beer, looking for a follow through and a breakout. Ritchie Brothers, Auctioneers, relative strength line climbing, blue dot scan following through. United Therapeutics, nice bullish trend, relative strength line climbing, testing all-time highs. And check out the stocks that are showing greater than 100% volume. These are candidates that we like to keep an eye on for follow through as volume precedes price. Mezzo, this is one that Lee Star had mentioned to me on Friday. He had a position going into Friday. MBOT, MBOT, among others. These are all breaking higher. Just check out some of these names on the opening monologue that I've already scanned through, as well as some of the names on this list. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter, April the 26th, 2020. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. So be sure to check your inbox for that later tonight. Bottom line, we're looking for markets to continue higher if we can stay above the 50-day moving average. The key, again, is VIX. If VIX drops, that's going to help market makers, dealers, and institutions support the markets better. So make sure you keep your ears peeled for VIX moving lower. And hopefully we hear a little bit less worrisome news on the coronavirus front going into the week ahead. I hope this helps. Take care, and we'll talk to you soon.